Hello everyone, welcome to Module 8 of Sanction. Up to this point, we have understood sanction concept, types of sanction, sanction list, screening process, roles and responsibility, evasion techniques, and consequences of violation. In this final module, we will bring all that knowledge together and see how sanction compliance works in real life. This module focuses on practical scenarios and case style explanation similar to what compliance professionals face in banks and financial institutions every day. The purpose of this module is to help learners think like a sanction analyst rather than just memorize rules. So, let us start with a very common scenario involving an individual customer. A customer approaches a bank to open a saving account. All documentation are submitted correctly. During sanction screening, the system generates an alert because the customer name is similar to a name on the sanction list. At this stage, the system does not know whether this is a real sanctioned person or just a name match. This is where the role of a sanction analyst becomes critical. The analyst begins by carefully comparing the customer's full name, date of birth, nationality, and place of residence with the details available on the sanction list. If the date of birth and nationality do not match and there is no other connecting factor, the analyst must conclude that the alert is a false positive. However, if multiple data point aligns, such as nationality, age range, and geographic connection, the alert must be treated as a true hit. In this case, the onboarding process is stopped. The account is not opened and the case is escalated as per internal procedures. This scenario teaches an important lesson. A sanction alert is not a decision, it is the beginning of an investigation. Now let us look at the corporate scenario. A company applies for a business account. The company itself is is not on any sanction list. Its directors appear clean. At first glance, everything looks compliant. However, during beneficial ownership analysis, the bank identifies that one of the shareholders hold a significant percentage of ownership through another entity. Further investigation reveals that this indirect owner is a sanctioned individual. This is a classic example of indirect sanction exposure. Even though the company name does not appear on the sanction list, the company is still considered sanctioned because it is owned or controlled by a sanctioned person. In such cases, banks must treat the company as restricted. This scenario highlights why sanction screening cannot stop at surface level checks and why ownership and control analysis is critical. Let us now discuss a transaction based scenario. A customer initiates an international wire transfer. The sender and receiver names do not appear on any sanction list. However, the transaction involves a country that is subject to sanction. In this situation, the sanction risk arises not from the individual involved, but from the geographic exposure. The bank must analyze whether the transaction is permitted under sanctions regulations, any exceptions applies, or any special license are required. If the transaction violates sanctions restriction, it must be blocked, even if the customer insists that the purpose is genuine. This case helps learner understand that sanction risk is not limited to names alone, countries and regions also matter. Now, trade finance cases misuse of shipping routes. Trade finance transactions often involve complex documentation and multiple parties. In this scenario, a bank receives a request to issue a letter of credit for goods being shipped from one country to another. On paper, both countries appear non sanctioned. However, during document review, the bank notices that the shipping route passes through a sanctioned port or that the origin of goods is indirect linked to a sanctioned country. This creates a sanction concern. The bank must decide whether the transaction is structured to bypass sanction by making the true origin or destination of goods. If so, the transaction must be rejected. This scenario demonstrates how transaction evasion can occur through trade and why trade finance is considered a high risk area. Now, false positive management and decision making. False positive are a daily reality in sanction screening. In this scenario, a bank receives hundreds of alerts daily. Most of them are false positive, caused by common names or partial matches. The challenge for sanction analysts is to clear false positive efficiently without missing true sanction risk. This requires a structured approach, careful review, and proper documentation. Rushing through alerts to meet productivity targets can lead to serious mistakes. This can reinforce the importance of quality over speed in sanction compliance. Now, escalation and reporting case. In some situation, analysts may not be able to make a clear decision. For example, a customer may have indirect links to a sanctioned entity, but information may be incomplete or unclear. In such cases, escalation is the correct approach. The case is referred to senior compliance officers and sometimes to legal or regulatory advisory team. Decisions are taken collectively based on risk assessment and regulatory guidance. This scenario teaches that escalation is not a failure, it is a key control mechanism. Now, end to end sanctions case, putting it all together. In a complete end to end scenario, a bank may face a customer with complex ownership, transactions involving high risk countries, pressure from business teams, or timelines. The compliant teams must apply sanction screening, ownership analysis, transaction monitoring, documentation, and escalation. This case brings together everything learned across all modules and shows how transaction sanctions compliance work as a continuous and risk based process. In this module, we applied theoretical knowledge to practical situation. We learned how sanction issues arise in individual, customer, corporate structure, and transactions and trade finance. We also saw the importance of investigation, judgment, escalation, and documentation. Sanction compliance is not about memorizing rules. It is about thinking critically, understanding risk, and acting responsibly. With this, we end our Module 8 sanction. Thank you.